Committee will come to order. Without objection, the Chair is authorized to declare a recess of the committee at any time. We're going to start just a tad early this morning because we do have some other activities around the Capitol today, so I'll get to it in a second here. This hearing is entitled The Impact of International Regulatory Standards on the Competitiveness of U.S. Insurers. Before we begin, I'd like to thank today's witnesses for traveling to HVC 210, today's hearing. The audiovisual system of the Financial Services Committee main hearing room is being replaced, and the room is being updated to meet the requirements of the Americans with Disabilities Act. So I want to thank all of you for your patience, and we beg and borrow and steal hearing room space over the next few weeks here. As I go by every day the hearing room, it looks like we're making progress, albeit very, very slow. I want to thank the witnesses that the Speaker's Office has asked. I want to inform, the witnesses that the Speaker's Office has asked that members be on the floor by 10:35 for the joint session of Congress with the Japanese Prime Minister. This committee will recess no later than 10:45 for the joint session. The hearing will reconvene immediately following the Prime Minister's remarks, and I encourage our witnesses and members to return to the hearing room as quickly as possible. I now recognize myself for 3 minutes to give an opening statement. First, I want to start by thanking our distinguished witnesses for appearing today. Our nation enjoys the most robust, policyholder-centric insurance system in the world. The industry performed well during the financial crisis, and policyholders enjoyed the safety and soundness that comes with our nation's unique regulatory structure. It is vital that we uphold the system that has served Americans well for so many generations. Any discussion or compromise that jeopardizes the U.S. insurance industry, or more importantly, the policyholder, should be rejected. This is a complex time for insurance, and while much attention has been paid to international discussions, I want to assure the witnesses that this committee will not lose sight of what's happening domestically, particularly as the Federal Reserve begins the rulemaking process for a domestic capital standard. It is essential the Federal regulators, which are, as a reminder, subject to congressional legislative action, work with the states and industry to base any role on the system we have in place today. Then, if appropriate, our representatives to the IAIS can export our insurer and policyholder-centric model to the international insurance community. The United States finds itself with the opportunity to lead and not be led. We must seize that opportunity. It's vital that the gentlemen appearing today work in concert and in the interest of the United States to ensure that no ground is ceded to foreign regulators and that the necessary time is taken to produce common sense rules. The international conversations taking place at the IAIS continue to cause consternation in the industry. It is my hope that today's hearing will help calm those fears and that our witnesses will be forthcoming and give this committee a clear vision of where we're headed and when we'll get there. I look forward to today's testimony and thank our witnesses for attending. With that, I yield 5 minutes to the ranking member, the gentleman from Missouri, Mr. Cleaver.
Thank you, Mr. Chairman, and thank you for the hearing. This probably doesn't happen much, but I'd like to associate myself with the comments of the chairman. I think he pretty much set the tone for the hearing, and I recognize that the G20 has, in fact, continued to push for the strengthening of the international regulatory regime. And I, like my colleague from Missouri, would like to make sure that there is a minimum of regulatory burden on the insurance industry. After all, the problems that generated this 2007, 2008 economic collapse was not generated by your industry. At the same time, we've got to make sure that we don't end up with inconsistent requirements across 50 separate jurisdictions that could negatively impact the industry. So I yield back my time and hope that this will be one of those times when everybody works together for a common solution to a problem that I think even the industry would like to see some unity on. I yield back.
Thank the gentleman. And with that, we welcome the testimony of our witnesses today. We have Mr. Michael McWraith, Federal Insurance Office, U.S. Department of Treasury. We have Mr. Vander Wade, Deputy Director, Federal Reserve Board of Governors. and Mr. Kevin McCarty, Commissioner, Florida Insurance Department. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony. Without objection, each of your written statements will be made part of the record. If you're not familiar with the box in front of you, green to start, yellow says you got 1 minute left, and red says that's it. We'll try and keep our questions succinct up here. But with that, Mr. McWraith, you're recognized for 5 minutes. Thank you.
Thank you, Chairman Luedkemeyer, Ranking Member Cleaver, for the invitation and the opportunity to join you today. I'm pleased to be here with my fellow panelists. We released the FIO's second annual report on the insurance industry in September 2014. The report cited 2013 data showing the U.S. industry reported record surplus levels of approximately $990 billion. Non-health insurers in 2013 collected more than $1.1 trillion in premium, nearly 7% of U.S. GDP. The report also cites data showing that private market volume is increasing dramatically in developing countries. For example, China's private insurance market increased by more than $137 billion in the last 5 years, South Korea by nearly $50 billion in that same period, and Brazil by more than $41 billion. These facts illustrate the globalization of the insurance market and explain the increased focus on global standards. For this reason, among others, FIO has a statutory role to coordinate and develop federal policy on prudential aspects of international insurance matters, including representing the United States at the International Association of Insurance Supervisors. In this work, we collaborate extensively with our colleagues at the Federal Reserve and my former colleagues at the state regulatory system, including my 2 colleagues on this panel. Our multi-part supervisory structure must be coordinated in order for the U.S. to assert leadership in international developments. That is exactly what happens today. International insurance standards are not new. The IIS was formed in 1994, and state regulators were among the founding members. International standards reflect best practices based on the collective analysis and judgment of the participants. Importantly, international standards are not self-executing in the U.S. Federal and state authorities will study, test, and analyze the potential value and impact of any international standard prior to implementation. The U.S. has the most diverse and competitive insurance market in the world, with insurers that operate in one part of one state and insurers that are multinational and engaged in a variety of financial services. With this in mind, we work with our international counterparts to build a global consensus that works for the United States. Simply put, international standards must, when implemented, serve the interests of U.S. consumers and industry and the national economy. Now, the IIS recently completed structural reform. These changes eliminated the pay-for-play dynamic and increased the IIS's transparency and independence. No longer will the IIS depend upon the $20,400 annual fee paid by industry observers. Now, open meetings and information will be available to all stakeholders, not just those who can afford the annual fee. Consultation with stakeholders will be more rigorous and uniform. After 12 months of extensive public consideration, the IIS implemented in 2015 a better approach to both governance and transparency. At the Federal Insurance Office, we continue to create opportunities for stakeholders to meet in one place with all U.S. IIS participants. In 2015, we've continued with the EU-U.S. insurance project. The EU and the U.S. are 2 important jurisdictions, both as markets and as homes for insurers. With the collaboration of state regulators, we've worked with our EU counterparts to improve understanding and, where appropriate, consistency and compatibility. One objective identified in the project is a covered agreement, not a trade agreement. A covered agreement is an agreement between the U.S. and another country involving prudential insurance measures. We look forward to engaging with this committee before and during the negotiations of a covered agreement. The U.S. market and its oversight are unique. Through effective collaboration at home and abroad, U.S. authorities will continue to provide leadership that complements our shared interest in a vibrant, well-regulated market that promotes competition and financial stability and protects consumers. And finally, in all of our work, internationally and domestically, Treasury priorities will remain the best interests of U.S. consumers and insurers, the U.S. economy, and jobs for the American people. Thank you for your attention. I look forward to your questions.
Thank you, Mr. McRaith. Mr. Vanderwade, you have 5 minutes.
Chairman Luetkemeyer, Ranking Member Cleaver, and other members of the subcommittee, thank you for inviting me to testify on behalf of the Federal Reserve. The Federal Reserve welcomes the opportunity to participate in today's hearing, and I am pleased to be joined by my colleagues from the FIO and the NAIC. While we each have our own unique authority and mission to carry out, we remain committed to working collaboratively on a wide range of international and domestic insurance issues. With the enactment of the Dodd-Frank Act, the Federal Reserve assumed responsibility as the consolidated supervisor of insurance holding companies that own banks or thrifts, as well as insurance holding companies designated by the FSOC. Since the passage of the Act, we have been hard at work creating a supervisory framework that is appropriate for the insurance groups that we oversee. Our principal supervisory objectives for the insurance holding companies that we oversee are protecting the safety and soundness of the consolidated firm and their subsidiary depository institutions, while at the same time mitigating any risks to financial stability. We conduct our consolidated supervision of these firms in coordination with state insurance regulators who continue their established oversight of the insurance legal entities. Congress recently amended the Dodd-Frank Act to enable the Federal Reserve to focus on constructing a domestic regulatory capital framework for our supervised insurance firms that's well tailored to the business of insurance. Since the passage of this amendment to the Dodd-Frank Act, the Fed has been engaging extensively with insurance supervisors and insurance firms to solicit views on the various approaches to development of an appropriate consolidated capital regime for insurance holding companies. We are committed to continuing this engagement and the following formal notice and comment processes as we move forward on our insurance capital work. The Federal Reserve is also participating in the development of international insurance standards. Some of the insurance holding companies that we supervise are internationally active firms that compete with global insurers to provide insurance products to businesses and consumers around the world. Accordingly, in November 2013, the Fed joined our state insurance supervisory colleagues from the NAIC and FIO and became members of the International Association of Insurance Supervisors, or IAIS. Through our membership in the IAIS, the Fed has been and will continue to be engaged in the development of global standards for regulating and supervising internationally active insurers. As a general proposition, we believe in the utility of having effective global standards for global financial firms. When implemented consistently across jurisdictions, such standards can help provide a level playing field for global firms, can help limit regulatory arbitrage and jurisdiction shopping, and can promote financial stability. Since joining the IAIS in late 2013, the Fed has been an active participant in several key committees, working groups, and work streams. Throughout our first year and a half as a member of the organization, and consistent with our statutory mandate, we have been particularly focused on the financial stability and consolidated supervision work of the IAIS. One of the key strategic priorities of the IAIS is the development of a supervisory framework and consolidated capital framework for internationally active insurance groups. The Fed has supported the construction of group-wide supervisory frameworks and consolidated capital standards for international insurance groups, so long as they are transparently developed, well-tailored to the U.S. insurance risks, properly calibrated, and complementary to our insurance standards at the legal entity level. A second focus of the IAIS involves the identification of global systemically important insurers, or GSIs, and the design of an enhanced regulatory and supervisory framework for GSIs. It is important to note that any standards adopted by the IAIS are not binding on the Fed, the FIO, state insurance regulators, or any U.S. insurance company. And during the build-out of standards for global insurance firms, the Fed will work to ensure that the standards do not conflict with U.S. law and are appropriate for U.S. insurance markets, U.S. insurance firms, and U.S. insurance consumers. Moreover, the Fed would only adopt IAIS regulatory standards after following the well-established rulemaking protocols under U.S. law, which include a transparent process for proposal issuance, solicitation of public comment, and rule finalization. The Federal Reserve has acted and will continue to act on the international insurance stage in an engaged partnership with our colleagues from the FIO, the State Insurance Commissioners, and the NAIC. Our multi-party dialogue strives to develop a central Team USA position on the most critical matters of global insurance policy. The Fed will also continue to actively engage with the U.S. insurance industry to help ensure that any global insurance regulatory standards work well for U.S.-based firms. Mr. Chairman, thank you for inviting me to testify today. I look forward to an active dialogue on these issues with you and other members of the subcommittee.
Thank you, Mr. Vanderwait. Mr. McCarty, you have 5 minutes.
Good morning, Mr. Chairman, Lukemeyer and Ranking Member Cleaver. Thank you for the invitation to testify here on behalf of the NAIC. The U.S. insurance market is the largest and most competitive in the world. Taken individually, U.S. states make up about half of the world's 50 largest insurance markets. My state, the state of Florida, for example, is the 12th largest insurance jurisdiction in the world. State regulators cooperate closely on a regular basis to provide leadership on global insurance issues and activities with a focus on policyholder protection and maintaining stable and competitive markets. As capital rules for insurers are developed, state regulators continue to oppose a one-size-fits-all, bank-centric set of regulations and focus instead on the importance of company and product-specific analysis and examination. Capital requirements are important, but if imposed incorrectly or without regard to differences in products and institutions, they can be onerous to companies, harmful to policyholders, and even encourage new risk-taking in the insurance industry. Any capital requirement must be adaptable to our markets and benefit our consumers. It is also important to keep in mind that any new standards are in addition to, and not in lieu of, state risk-based capital requirements applicable to insurers within the group. The IAS is developing capital proposals for internationally active groups, including many firms that are based in the United States. We have serious concerns about the process and the aggressive timeline given the legal, regulatory, and accounting differences around the globe. All the same, we are fully engaged in the process to ensure that any standard appropriately reflects the risk characteristics of the underlying business and does not lead to unintended consequences, such as limiting products available to consumers or stagnating growth, jobs, and innovation. We will not implement any international standard that is inconsistent with our time-tested solvency regime that puts policyholders first. Critical to the credibility of the decision-making of the IIS is an all-inclusive and transparent process. While we agree that the pay-to-play structure needed to be reformed, we believe there was a less intrusive way to accomplish that goal. We will continue to advocate for increased transparency and encourage our colleagues at the Federal Government to do the same. We are also concerned with the lack of transparency at the FSB. We have had only limited access to FSB discussions directly relevant to the very sector that we regulate, while little participation do we have only occurs as a representative of the IIS, even after requesting inclusion from our FSB representatives in the United States. We find the lack of support for our inclusion by our Federal colleagues troubling and not in the best interest of U.S. insurers and, more importantly, to our policyholders. For our part, the NAIC has longstanding procedures and ongoing responsibilities to seek input from consumers and other interested parties. We will continue working on these issues through an open and transparent NAIC process. To that end, last year, the NAIC formed a working group, which I chair, to provide ongoing review of ComFrame and international group capital developments. We are also exploring group capital concepts appropriate for U.S.-based internationally active groups and provided a comprehensive feedback to the IIS regarding the proposed ICS. State insurance regulators have also been actively involved in the EU-U.S. Dialogue Project, which is designed to achieve a better mutual understanding of the regulatory approaches used by the U.S. and by Europe. A core issue of discussion has been Europe's call for a reduction in our reinsurance collateral requirements. State regulators have worked to develop an approach by which collateral can be reduced in a consistent manner commensurate with the financial strength of the reinsurer and the nature of the regulatory regime that oversees it. By year-end, we anticipate 37 states, representing 93% of the premium in the United States, will have adopted this approach. In spite of this action, Treasury has expressed an interest in exploring discussions with the EU on a potential preemptive covered agreement. Given the progress we have made, the NAIC is not convinced that a covered agreement is necessary. While we will continue to engage Treasury and USTR on this issue, we would expect to be directly involved in these deliberations, and we believe preemption of State law by Federal agents should be a last resort. In conclusion, State insurance regulators have a strong track record of effective collaboration and supervision. We remain committed to coordinating with our Federal partners. We also take seriously our obligation to engage internationally in those areas that impact the U.S. economy, companies, and consumers. State-based regulation is always evolving to meet challenges posed by dynamic markets, and we continue to believe that well-regulated markets at home and abroad make for well-protected policyholders. Thank you again for the opportunity to be here on behalf of the NAIC. Thank you.
Thank you, Mr. McCarty, and thank all the witnesses for your testimony this morning. It was very insightful. And with that, I recognize myself for 5 minutes. Mr. McRaith, there's been much discussion surrounding the timeline with regards to international capital standards at the IAIS. And while U.S. representatives at the IAIS have indicated the process is slowing, we hear many reports that European regulators are moving ahead. In fact, conflicting reports with regards to, depending on who you talk to here in this country. Can you give us an idea of the timing on this issue from your perspective?
The international community is moving forward with the development of capital standards that will promote convergence over a long period of time. What exactly that period of time is, no one knows at this point. What we know is in February of this year, the international participants at the IIS, frankly led by our office with the support of the Federal Reserve and state regulators, we negotiated as an international community, what do we mean in terms of our goal and our timeline? And what we said was, we want to move forward incrementally, small steps. This is something that will take a long period of time because the differences country to country are extremely significant, and we need to be extremely mindful of potential negative unintended consequences as we move forward.
Mr. McCarty, what's your view of the timeline? You're around the negotiations as well. Please, there you go.
Given that risk-based capital took over a decade to develop in the United States and about a decade or more to develop Solvency II, the original timeline of 18 months seemed overly aggressive to impose a global capital standard throughout all the regions of the world. What Director McGrath was referring to, I think, was a very important achievement. There was agreement in the meeting in February by the IIS to look for what the ultimate goal looked like without setting a timeline. However, it's important to point out that the committee structures are still being very aggressive, and my concern about the aggressive timeline with regard to the committee structure is that I'm concerned that certain amount of field testing might get shortchanged in the process. For instance, we want to make sure that we have ample time to test things like the GAP Plus approach and other timelines other than a one-year timeline. I think it's important that, given the very significant impact that this may have on American companies and consumers, that sufficient time is allowed for us to field test and test the different variables that are out there to ensure that we have a product that encompasses the U.S. regulatory framework.
Do you believe that your point of view and your concerns are being heard and addressed and are being taken seriously with regards to these negotiations?
We certainly have expressed this from the very beginning. I think that the Chair and the members of the committee understand our concern. I just concerned somewhat about the progress that is being made in the committee structure. While this is a determination that has been made by the Executive Committee to set an ultimate goal, it really hasn't slowed down the pace going forward with regard to meeting guidelines for 2016.
Mr. Vader, are you comfortable with the negotiations at this point, and what's your concerns or opinions with regards to the timeline on capital standards? Do you have any concerns about it at all? I know in your testimony you want to continue to work with a policy-centered type of approach that we have here in this country. But what are your views?
So I would agree with my colleagues that it's important to get the global insurance capital standard right, and more important to get it right than to get it done quickly. And it is a pretty complicated endeavor with lots of moving parts. We need to make sure that the rule works for kind of all the major jurisdictions, all the major insurance jurisdictions around the world. So I think the IAS is going to operate in a deliberate fashion with multiple rounds of consultation on their proposals. I think that is the right path. I think it will take the IAIS several years to get that capital standard developed, and there will be a multi-year implementation period as well for each national jurisdiction. I think we need to continue as the U.S. representatives on the IAIS to make sure that that is the case, that the IAIS focuses on getting the standard right and does not excessively hasten towards that conclusion.
Very good. Thank you. Mr. McGrath, my time was very limited, just a couple comments. You and I have had this discussion before, and I made this comment that, you are an advocate and a mediator, not a regulator, and we want to continue to hope that you stress that position and continue down that road. I understand that you had a recent meeting over in Italy. Is that correct?
I was not personally.
Oh, okay.
There was an IIS technical group
Okay.
meetings, working group meetings, and public session in Italy recently, yes.
I just want to get your commitment that when you do have these international meetings, you'll work in concert with my office and this committee to make sure that we have the updated, most current information with regards to what went on in those meetings, so we can be reactive and be supportive if we need to be.
Mr. Chairman, we welcome the opportunity to engage with you and members of the committee.
Thank you very much. With that, I yield to Mr. Capuano for 5 minutes.
Thank you, Mr. Chairman. Thank you for yielding. Gentlemen, thank you for coming. Could any of you point to me the law, the federal law, the United States federal law, that empowers you to regulate non-SIFI insurance companies? Could you cite that law to me?
So the Federal Reserve, under the Dodd-Frank Act, the Bank Holding Company Act, and the Homeowners Loan Act, has authority, in addition to regulating the non-bank SIFIs that have been designated by FSOC that engage in insurance.
SIFIs. There are 3 insurance companies that are SIFIs.
Correct.
And those are the 3 you can regulate.
Yes, but in addition to the SIFIs, we are also empowered to regulate, required by law to regulate any firm that owns a depository institution, a bank or a thrift, and several
Can
insurance.
you point to me the law that empowers any United States federal agency to at the federal level to regulate a non-SIFI, non-bank owning insurance company? I didn't think so, because there isn't one. And yet you are negotiating as if there is. Now, the thing that's amazing to me is that I would argue there's a lot of work to do here. Mr. McGrath, you've been before us many times. I hope you count me as one of your defenders and supporters. I think FIO's work is critically important. And I will clearly state that I have been a supporter of an optional federal charter. I know that gets some people all worked up, and I will hear phone calls tomorrow. But I always emphasize the word optional, but that's a different issue, which would then allow companies to choose to be regulated at the federal level. Now, we don't have that yet. Why are you negotiating for federal standards for companies you cannot enforce regulations on?
Congressman, the work at the IIS is the development of standards. It's independent of the regulatory structure in any one country. So in this work, as we represent the United States and work closely with our state colleagues, you'll remember I was the insurance director for a long time in Illinois, work with our Federal Reserve colleagues. Our objective is to influence the consensus internationally so that it reflects and integrates the best interests of the United States. Then as those standards are developed, they're then implemented at the state level, or in some cases at the federal level. So you're hoping that the
state levels will adopt your work. So this is, at the moment, an academic endeavor, which is not necessarily unworthwhile, but in the final analysis, after all the work that you do with the IAIS, it will apply to 3 insurance companies. Is that a fair conclusion? And I understand you hope that these states will do it, and I'm happy to work with anyone who wants to talk about an optional federal charter, but at the moment, it would apply to 3 insurance companies.
international standards have been around since 1994, and the states have implemented those international standards in a way that reflects the state approach.
So you're
to those
suggesting that the
standards.
IAIS is something along the line of a model law, trying to do best practices to help our state friends see the light.
I think the IIS mission is to promote global financial stability and promote best practices and supervision.
Well, I respect that,
globally.
but I mean, first of all, they have no record of doing so because I don't think they've done such a great job. Now, don't get me wrong, I think some of our state regulators haven't done such a great job. I kind of remember a little problem with AIG, but that's a different issue. What I do think is that if we're going to have federal regulations, which I don't oppose, that we need to come to Congress and say we want to have federal regulations on insurance companies. We'll have that debate. We'll see if you have the support, and if you do, we do it. But if you don't, I kind of think there's a lot of other things that you should be doing, Mr. McGrath, and certainly a lot of things the Fed should be doing that matter. Now, I have no problem going to conferences and discussing a United States perspective on various items, but I got to tell you, everything I've read from the IAAS certainly looks like they expect us to just adopt it the day after it's done. And I understand you don't want to say that, but I want to say it real clearly to those friends of the IAS. We love you. We respect you. We want to work with you, but you're not telling us what to do. In the final analysis, it'll be the United States that makes the decision what happens to United States companies, not other people. And if we want to talk about it in the long run, great idea. But I think it's got to be said, and I got to tell you from the testimony, if you read the testimony, there's a few things that say that, but most of the testimony presumes that it's going to be adopted, and I just think it's very important to put it on the record that, again, good exercise, no problem with the discussions, have a real problem with pretending or presuming or letting it go unspoken that in the final analysis this could all be for naught. And thank you, Mr. Chairman, for your indulgence.
Thank the gentleman. His time has expired. With that, we go to the gentleman from New Jersey, Mr. Garrett, for 5 minutes.
Thank you. Good morning. I probably eventually will get along the line as the gentleman from Massachusetts, but
God, Mr. Chairman, I'd like to change my...
We're all in trouble if we associate ourselves with your remarks, Mr. Capriano, although today I'm tempted to do so myself.
But I may start.
Take my temperature here.
I just want to start someplace else, and by that time, maybe I'll change my mind. Mr. Vanderwait, given the, and this maybe ties into it, so given the ongoing efforts in both here in the House and the Senate to bring more accountability and also transparency to the Federal Reserve, I would like to discuss with you in a little more detail the international capital standards and the setting for the IAIG, and how it was originally conceived, and how, as maybe you already indicated, how some of this has mutated over time. My understanding is that the initiative was originally intended, as also indicated, to only be for the globally systemic important insurers. Then, of course, in 2013, the goal changed. The list of the entities that would be subjected to the standards have been expanded. They now have a new category. And so it seems to me that Dodd-Frank process is, in some sense, being circumvented through not a transparent method, but more opaque, and some would even say secretive international process. At the end of the game, the goal would be to have different standards than what we have right now. And maybe I'll just digress from Mr. Waite and go to Mr. McGrath. You said, as far as the process to get there, we're going to take small steps. The question is, to what end? If we're going to take small steps or move the ball down the field, I would assume that all of you would have some sort of goal in mind as to what the goal line looks like, what the end model looks like, since you also said that we have a dramatically or fundamentally different structures in ours versus European. So I'll start with you, Mr. McGrath. Have you envisioned and articulated what the end model is or goal is that you are trying to with these incremental steps? And then I'll go back to Mr. McGrath.
Let me be clear. Our work at the IIS is to integrate the best interests of the United States, the U.S. view, into any global standards. What's driving that, Congressman, is the globalization of the
I
insurance
get that.
marketplace.
But what is the goal at the end of the day? So you integrate something into a model, but at the end you should have in mind, this is what we're going to strive for. This is how we're going to integrate it. And at the end of the day, this is what the final product is going to look like. Is that final product going to look like what the American model is right today, or is that model going to look like what the European model is today?
You're absolutely right. And to echo the comments of Congressman Capuano,
Yeah.
whatever's implemented in the United States will be a U.S. approach.
So the
It'll be done by
goal
the states
is so
and
the
the Federal
goal is
Reserve where appropriate.
So the goal is a U.S. model.
That's correct.
And that's the same goal that the international body is also agreeing to?
No, the goal is to
So if you-
establish global standards that reflect and integrate the U.S.
but what is- so-
interests.
so that's
and then
our- that's-
implementation is in the U.S.
Okay, so that's our goal. That's not necessarily their goal. I presume their goal would be a more European model.
In
that
fact,
fair to say?
It's in my view, Congressman, at least, and I don't want to speak for the others, but this is driven really more by the developing economies who are welcoming our companies into
But
their market.
at the end of the day, if you have two teams that are working towards the opposite different goals at the end of the day, I don't understand how then you can come to commonality on it. At the end of the day, you have to agree, at the beginning of the day, you have to agree what your goal is going to be. But I only have a minute left. Mr. McGrath, let me just, can you tell us, as we go towards these goals and these models, how were the exact thresholds and metrics used to determine the standards that are being discussed in these discussions? Is there any empirical analysis that shows that companies that fit the metrics that are coming up will pose either more or less risk to it? And if they do pose them, what analysis or quantifiable analysis that they have looked at to determine that? Either one of you, I guess.
The capital standard is being developed through extensive feedback and engagement with stakeholders. As Commissioner McCarty referred to in one of his earlier comments, there is field testing. So the firms themselves are directly engaged in providing
Real quick question, only 10 seconds left. Mr. McGrath, are those exact same standards being done right now through the Fed and FSOC for the U.S.? If they're good for them internationally, why are they not being the exact same standards here in the U.S.?
The
I'll
FSOC
have to Ms. Wait, please, to address that.
So the FSOC has a very independent process around how it assesses the systemic footprint of U.S. insurance firms, and it's relatively independent from what the IAIS is doing on its GSI identification process.
So if it's good for one, it's not good for the other, is what you're saying?
They each have different goals and purposes.
So there's different standards as to what is good and what is bad. Okay.
Yeah.
Yes. Was that yes?
Yes, they have different standards. They bear some resemblance to each other, but they're different in many ways.
That's incredible to understand that what's systemically important globally is not systemically important for the United States. I appreciate the testimony, but that's absolutely an incredible testimony. Thank you.
Thank you, Mr. Garrett. With that, we go to the ranking member, the gentleman from Missouri, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. We don't have much time. What I would like for each of you to do is to give me one advantage, if you can, of the benefits of international standards, and then with time, I'd like you to give me a negative of international standards. So if you could just be as succinct as possible on the benefits.
Sure, I'll start on that one. I think I'll be succinct, but I'll list off at least two benefits of comparable global and international standards for financial firms and insurance firms in particular. The first is achieving a level playing field across the world. It's important, I think, for America, as foreign insurers operate in our market, that they be subject to a regulatory and supervisory regime that's at least as tough as ours. We don't want the foreign companies to be able to compete in the United States insurance market on more advantageous terms than our firms are. So having that kind of a comparable global playing field on some of the key regulatory and supervisory standards can be helpful from a global level playing field basis. It can also be helpful, I think, to achieve global financial stability to the extent that particular firms have a very large systemic footprint. As a general matter, systemic risk seeks out the place where it is least regulated, and it tends to collect and deposit there and grow. So having kind of a decent floor around the international regulatory standards can prevent those sort of accumulations of systemic risk cesspools, so to speak. But there are some potential downsides of international regulations as well, and I think the key one is if you have an international regulation that just doesn't work well for some of the major markets, is not well tailored to the risks in those markets, that can obviously result in inferior macroeconomic outcomes for those countries whose firms can't use the rule efficiently.
Mr. McCarty?
I definitely think there is a role for international standards. We have, as Director McGrath has alluded to, for over a dozen years, we've had insurance core principles, which I think are very valuable for evaluating not only a developed country but emerging markets. More and more of our markets are gravitating towards Asia and South America, so it's important that they have core principles in place to provide some guidance on how markets should be regulated in those areas. My concern is not so much on standards, but what the implementation of standards, as my colleague has referred to, that are unimplementable, where you are putting in, for instance, hoisting, for instance, a consolidated capital standard with a group-centric approach like banks use, as opposed to a more emphasis on a capital adequacy test or stress tests, and looking at inter-party transactions in ways to limit risk. And I think that it could be a standard, but it's not the standard that seems to be the preference of our colleagues around the world.
Yeah, Mr. McGrath, I'm not sure you said that, but
Succinctly, I'll reply to your question.
Yes.
The advantage of global standards is they will promote further opportunities for our companies that are seeking to grow in developing economies in Asia, South America, and Africa. Those supervisors in those countries are looking for common standards, common language. The potential negative is if we, the United States, are not actively engaged, asserting our best practices, our points of view, so that whatever the global standard is, it incorporates, reflects, integrates the best interests of the United States.
thank you. I yield back, Mr. Chairman.
Thank you. With that, we're going to adjourn for a while. We have the Prime Minister of Japan in today for a joint session of Congress to hear his address. Our members, many of them would like to attend that. We will reconvene upon his closing remarks as quickly as possible. I'm sure he's a politician like the rest of us, so no telling how long he'll talk. But we're hopeful that it'll be around an hour. But I would ask everybody, the panel especially, to within about 10:30 or quarter till, to be able to find your way back here, just in case things go short. With that, the members are asked to reconvene here upon the conclusion of the Prime Minister's speech, and with that, we will recess.